Okay, welcome back everyone to our final part of our exam review. So when we left off, we just journalized these transactions, and now we are going to look at this adjusting entry dealing with supplies. So at the end of the period, it is discovered that there are only $2,000 worth of supplies on hand. Record the adjusting journal entry. Now, it's going to be based off of this right here. So they're saying that there was 3,000 at the beginning of the period, so we'll make a supplies T account. But now we come to find that we only have 2,000 actually. So what happened? Well, guess what? We use the supplies, right? Because that's why you get them. So now we have to find a way to get our supplies balance to reflect our actual supplies. So how do you think we're going to do that? If you said we're going to credit supplies, you are correct. So, but what's our debit? Well, we used up some assets. So what's the definition of that? An expense, right? So it's going to be supplies expense as our debit, and it's going to be for this $1,000 amount because that's how we get from 3,000 to 2,000. And credit supplies. So that's an adjusting entry. It seems pretty basic, but on the exam, you'll probably have a question like saying, if you didn't do this, would supplies be overstated or understated? And after doing this, we know that it would be overstated because we'd be at the 3,000 number as opposed to the 2,000 number. Now, if it asked, would net income be overstated or understated? Net income would also be overstated because we're increasing expenses, which are going to decrease our net income. So, net income and supplies are both overstated if we don't do the adjusting journal entry. And it doesn't just have to be with supplies, too. It could be with like prepaid insurance. So, if we use up the prepaid insurance, or the prepaid rent, we would debit like a rent expense and then credit prepaid rent. And again, if we didn't do that, net income would be overstated and prepaid rent would be overstated. So I added this kind of problem very quickly after the last video because I realized that she really likes these types of problems and I didn't have one on the video. I have them on the exam review on the Word document. In fact, this is the same problem, just copied and pasted, but I just want to show you guys how to kind of tackle these problems. So the first, I'm only looking at the total assets because I feel like if you use this strategy, it makes answering all kinds of questions and we can just talk about it, how to deal with it later. All right, so the first thing you're going to want to do is you're going to want to label what each of these accounts are. So rent expense is an expense. Cash is an asset. Accounts payable, a liability. Service revenue is a revenue. Wages expense, an expense. Prepaid expenses. She's always going to have an account like this in like these lists, and you can't just look at the expenses and say, or the expense verbiage and call it an expense. It is an asset because we are paying to use an economic like benefit. Like, so when we pay our rent for the whole semester, we're paying to use the right to have that living arrangement for the whole semester. But they call it a prepaid expense because we're paying money for that, but we get an economic benefit from it still. So that's why it's an asset. All right, accounts receivable, asset. Equipment, asset. Dividends, just dividends. Unearned revenue. Here's the other one that's always going to be in these lists. You're going to look at the word revenue. You're going to want to put it as a revenue, but it is a liability because it is when we get cash for something we haven't done yet. So we owe them a service. So that's another point, that liabilities aren't always we owe somebody cash. Sometimes we owe them a service. And here's the last one that you'll probably have too. Accumulated depreciation. This is something called a contra asset, and it decreases assets. So basically, accumulated depreciation shows the value that we've used up of all of our assets up to this point of owning them. So like if we own equipment and we think it's going to last for 5 years, after 3 years, it's not worth as much to us as it was when we first bought it. So this account shows that it's decreased in value. And so a contra asset decreases assets. So the question is asking for what are total assets. So now that we've labeled everything, we can just plug and chug. So we have the 15,000, we have the 2,000, the 4,500, the 9,000, and now we have to remember to subtract the 1,000 because it is a contra asset. And once we put this into our handy dandy calculator, we get 29,500. So now let's say the question asks for net income. Well, now knowing the equation for the income statement, which is revenues minus expenses, we just take all the accounts that we see listed as R, which is only the one, and then we subtract the E's. Shouldn't use a minus sign. 4,000, so that's an E, and then we got this 3,000, and that's it. And that leaves us with a net income of 3,000. So in the exam, when you see questions like this, label everything and take your time labeling them. Really look out for prepaid expenses, unearned revenue, and accumulated depreciation, and know how they're going to affect your answers. And with that, if you do this and you understood this video, I think you should be pretty good for exam 1. Remember to look at Sarbanes-Oxley because she usually has a conceptual question about that. Just know like what the general definition is. And if you have any other questions, don't be afraid to contact me. And good luck.